Good evening, ladies and gentlemen. Thank you for taking the time this evening to join us for this presentation for Holmeswood Apartments, property that we have under contract in Kansas City. Quickly going over the disclosure before we get started with this evening's presentation. This is for informational purposes only. You will, as you go through the investment sign-up process, get a private placement memorandum along with all the supporting documentation, and you can go through that in more detail as you are going through the investment sign-up process. Going over the agenda for the evening, we'll start out with the summary and key players, team buyers, going into the market overview, executive summary, followed by property and investment highlights. Then we'll go over the property management, followed by the subscription process, project timeline, and then Q&A at the end. So as we go through the presentation, if there are any questions that we have not answered or addressed, do type it in the chat box on the right, and we will try to address all of them towards the end of this evening's presentation. An overview of the opportunity: it is a 166-unit apartment property built in 1970. The purchase price is $14.1 million. Minimum investment amount is $50,000. It is a 506c investment, meaning that you have to be an accredited investor to be able to invest in it. A quick snapshot of the returns that we are projecting for this: total return of 101% for the total hold period, projected hold period of 5 years. The cash flow during the hold period is projected at 9.1%. The equity multiple of 2.01 and a very healthy IRR of 16.4%. We have this under contract for a hair under $85,000 per door, and the estimated equity required for this acquisition is $4.3 million. The key players in this, I'll just go to the next slide, and as we will go through our bios, my name is Tariq Sattar. I have been part of Brad Sumrock's group now for 6 years. Ivan and myself both joined back in early 2016, and through this time frame, we have acquired just about 2,000 units. We will go over the track record of these, several of these here in the next minute, but I just wanted to give the rest of my team an opportunity to introduce themselves first. Ivan, would you please go ahead?
Yes, thank you, Tariq. Good evening, everyone. Ivan speaking here. Excited to have this opportunity to share Holmeswood investment opportunity with everyone. My background: I've been investing in multifamily for approximately 6 years now, and have been a student with Brad Sumrock for the past 6 years as well. In that time frame, have sponsored roughly now 13 properties. I think this is my 13th property, and up to around 1,500 units. My professional background: spent 20 years in the Air Force, just recently retired from the Air Force as a lieutenant colonel, in which I flew airplanes my entire career. But now I'm the primary asset manager for Anthem Capital, and I work in tandem with Tariq Sattar, and my primary task is to oversee the business plan, the execution of the business plan for all of our assets, including Holmeswood. And now I'll introduce you to Shafiat.
Hello, everyone. Thank you, Alan. This is Tazrina Hussain. Me and my husband, Shafiat Hussain, are from Kansas City. Background-wise, I'm an accountant. Shafiat is an electrical engineer with MBA. We started our real estate investment journey 11 plus years ago with single-family homes in Kansas City area. Both of us are also licensed realtors in Kansas City metro area, as we have been buying and turning around value-add properties for our portfolio. We are part of Brad Sumrock Group as well. We are very excited to present this excellent investment opportunity at Holmeswood to you all. With that, I will turn it to Amy.
Thank you, Tazrina. Hello, everybody. So my name is Amy, and my husband Corey and I are also in Missouri, just 2.5 hours south. So we also joined Brad Sumrock's personal mentoring earlier in 2021. So Corey currently works for an IT consulting company on the business side, and I am focused full-time on multifamily investing. I recently quit my job this year, 2021, to focus full-time. So we are both real estate investors with 6 years experience in owning and managing office and retail space. And we're super excited to have you here and to share this opportunity with you. I'll turn it back over to Tariq.
Thanks, everyone. I will quickly go over track record of Anthem Capital. Ivan and I, when we started out, we both are in Oklahoma. We started out with the acquisitions in Oklahoma, had 6 of them over the years. Those have all actually been sold as time has gone on. The market has kept gaining strength. After Oklahoma, we expanded into Arkansas, then Arizona, Texas, Florida, and then most recently in Salt Lake City, Utah. The cumulative purchase price of the various assets that we have sponsored, $170 million. And as part of that process, we have raised just about $60 million in equity. Going through those acquisitions, we have experience with agency loans, both Fannie Mae, Freddie Mac. We have experience with bridge loans, as well as bank loans. We have, as I said earlier, we have sold several of these assets as they have gone full cycle. We have had the opportunity to refinance some of them along that path. And then we have also had the experience of getting supplemental loans of an existing agency loan. We have a lot of experience on that end as well. I'm going to now pass it on to Shafayat to go into the market, the Kansas City metro market.
Thank you, Tariq. I will go over high level on Kansas City metro market and also on the location of Holmeswood Apartment in the few slides. So as a quick note, me and my wife have been living in Kansas City and investing in real estate here over 11 years. We are very familiar with the Kansas City real estate market, and this market has proven to be very solid, steady, and rewarding for us. And size and population-wise, it's a decent-sized metro with population over 2 million. And that has also grown over 9% since 2010. It is the heart of Midwest with a very business-friendly environment. In 2020, there has been $110 billion investment in business development projects in Kansas City. Also, due to its central location, it is a very busy hub for logistics, distribution, and transportation. As you can see on the right side of the slide here, job-wise, it has a very diverse and steady job segments that has seen stellar job growth in recent years. For example, KC finished 2020 over 102,000 tech jobs, with third highest percentage growth of tech jobs in the US in 2020, trailing only San Francisco and Austin, Texas. So overall, as you can see on the chart here, with very diverse job industry, no one sector or employer can impact Kansas City job market. And on the map, as you can see, Kansas City overlaps in between state of Kansas and Missouri, and there has been tremendous growth on the southern part of Kansas City. For example, on the map, on the southern part, the Overland Park area, Overland Park, that's the most populous city in the state of Kansas. And you can see the Holmeswood is also located on the southern part of Kansas City, adjacent to Overland Park and Leawood area. So that's on the path of that growth of the metro. So on next slides, I will we'll take some closer look on the area of Holmeswood itself. This is a screenshot from Zillow showing homes for sale around Holmeswood Apartment. As you can see, it is located in a pocket with more expensive homes nearby, and it is on the path of growth. Our $85K door purchase price of Holmeswood Apartment is really a rare find in comparison with the homes prices around this area. We're going to the next slide. So demographics. This shows the demographic information of Holmeswood Apartment from CoStar reports. It has over $58,000 median household income within 1 mile radius, and that goes up further within 3 and 5 miles radius. So there is a good tenant base in the area to support the value add business plan for Holmeswood. This shows some major employers near Holmeswood Apartment within less than 10 minutes drive. And as you can see, this includes tech company like Cerner, hospital systems like Children's Mercy, St. Joe Medical, and big engineering companies like Burns & Mac, Black & Veatch, logistics companies, finance company. Again, a very diverse employers in the immediate area as well. I would like to point out on the map here that Burns & Mac headquarter, the marker number 3 here, and also Blue River Commerce Center are very close to Holmeswood and within less than 5 minutes drive. Also, as you can see here on the map, right side of the map, it's also, this apartment is conveniently located close to 3 major highways with very easy access to other KC employers. With that, I will wrap up the market and location overview and turn it to Tazrina.
Thank you, Shafayat.
Tazrina, Tariq here. Before you get started, just wanted to highlight a couple of things. One, Kansas City is a market that we had been looking at for a couple of years and have taken multiple trips there, looked at properties there, have pursued several opportunities, but have been unsuccessful. And this really is a great opportunity that we have been able to bring in at a very attractive per unit purchase price. The other thing I wanted to just point out is the median household income data that Shafia went over, 58,000 in the 1 mile radius, 68 in 3 miles, and almost 72,000 in 5 mile radius is very strong. There are times when you look at properties that may have a decent median household income within the 1 mile radius, but then it may drop as you expand that radius. And it is quite the reverse. In worst case, in this scenario, where as you're expanding the area, the median household income continues to go up, just pointing to the strength of the market where this property sits. Back to you, Tazrina.
Thank you, Tariq. So here I will quickly go over the investment summary and highlights. Holmeswood is a 166-unit apartment complex in Kansas City near 3 major interstate highways. The most lucrative part of this property is 100% units are classic, which means no upgrades have been done, and that provides the opportunity to upgrade the units for further rent growth. The GP team plans to renovate 110 units to capture $150 per month rent increase that our competitors are already charging. Also, we plan to increase other incomes by utility bill back, water conservation, increasing carport rent, and charging pet fees. Investment-wise, the purchase price is $14.1 million with estimated equity raise of $4.3 million with 5 years hold, and the total projected return is 101% with 9.1% average yearly cash flow and projected IRR of 16.44%. On the next slide, here I will go over a few property highlights real quick. As a property, this is a Class C plus property in the Class B area. The property has 166 units in 9 buildings, and it was built in 1970. The current occupancy is 94.6%. It is located in South Casey Market, where recent Class C multifamily sales are going over $100K per door, whereas our per door cost is $85K. With that, I will wrap up this section and turn it to Corey.
Thank you, Tazrina. We will go over to a few pictures of Holmeswood, and following that, the investment highlights. So I want to go over some of the investment highlights at a high level. Ivan's going to go dive deeper into that a little bit later in the webinar. Want to start off by saying this is an amazing opportunity. It's been owned and managed or owned by an out-of-state investor for the past 5 or 6 years with no property management company. So it's really been run by the in-house manager that also lives on site. That being said, you can imagine there's a lot of opportunity to increase rent, burn up loss to lease, et cetera. So first thing, implement capital improvements. As Tazrina said, we're going to be focusing on improving and upgrading 110 of the units. Interior-wise, going to basically make that pretty simple. As you can see, a couple of things are like painting, redoing the flooring, vinyl plank flooring with carpeting in the bedrooms. Really sprucing up the inside, making it look really, really nice, making it pop. On the exterior, there's a lot of opportunity there. It's a really, really great property. It's got a nice grounds. It's got a lot of mature trees, just a really great area for families to gather if they want to, but there's nothing there right now. Some of the things we want to do is make the landscaping a little bit nicer, really redo the outside with the exterior painting, fixing up some of the window trim repairs, and then the new signage. So our goal is to really rebrand this property, make it a lot nicer, take it away from where it is right now, rebrand it, and make it really pop. And some of the other things that we're thinking about is like a package locker for the residents. They have one now. It's actually inside the leasing office by the chimney. So by doing that, they actually will free up the leasing agent to do her job better. So some of the operational improvements, I'm not going to go through all of those. We've actually talked about some of them, but some of the more important ones, really right off the bat, we have the opportunity to increase rent without doing any upgrades for up to $50 for each unit. So as those units turn over, we're either going to be rehabbing them, bringing them to an upgraded level, or perhaps when the leases expire, increasing that rent. One thing we didn't talk about was expenses. So implementing a water savings program. The water is quite high right now. We have a really good opportunity to really not only cut back on the expenses with water, but do more with bill back to the tenants. Right now, the bill back to the tenants is really, really low. It's really could use an increase. And then thirdly, there's a lot of opportunity with other income besides from the rental income. Already talked about the utility bill back. Right now, there's no pet rental. So one of the things, going back to the last slide, we want to do is add a dog park. There's no dogs allowed right now. They don't charge pet rent. So what we want to do is bring in more of a pet-friendly, family-friendly environment. So we can start charging that pet rent. And lastly, our projected is a 5-year hold. So the depreciation, I want to start off by saying that we are not accountants or attorneys. I'd like to point out, though, as an investor, a significant portion of your investment can be allocated as a loss. as a passive investor. Let me clarify that, as a loss in the first year that offsets the gains. And this is typically around 75%. But most importantly, 2022 is the last year to take 100% of those depreciation loss in the first year. After 2022, that starts to go down 20% each year. 2023, it'll be 80%. 2024, it'll be 60%, et cetera. So 2022 is a great year to really get into these passive investments to appreciate the depreciation, if you say. So next, I would like to hand over to Ivan to talk more about the property. I'm sorry. I'm going to hand that over to my wife, Amy, to talk about the rentals.
Hi, everyone. All right. So investment highlights here with the unit mix and rental rates. So here you see a table of the unit mix in Holmeswood Apartments right now. As you can see, about 42% are 1-bedrooms and 54% are 2-bedroom units. Right now, on average, they're at about 89 cents per square foot rent per square foot. And what we intend to do is bring that up to $1.11 per square foot by implementing the improvements that Corey and Tazrina have mentioned already. Now, while this is a significant increase, about 25%, it's actually a result of a conservative analysis. Our pro forma is well below where the property management actually expects our potential rents to be after burning off loss to lease and after renovations. So that's very promising that we can actually exceed what we show here for our pro forma. And again, the reason for this, why we feel confident about this, as Corey said, is that the property is not professionally managed. The owner is out of state and the property manager actually is in-house and lives on site. So rents have fallen way below market, which gives us the opportunity for a tremendous increase. So here's a map of where Holmeswood Apartment is in relation to its comps. We picked 8 to show you, but we have 10 total. Oh, no, we have 8, yes. And so as you can see, right around Holmeswood, there are 5 comps within a 2-mile radius of Holmeswood. So there's a lot of competition there. And they all have higher rents overall above Holmeswood. The couple of properties of significance are property 2 and property 6, with both of their average rents well over $1,000 per square per month. So whereas Holmeswood's average rent is about $730 per month. So there's room for raising our rents, which is fantastic. So we can really get a significant return. So here we have a table of the average asking rents along with their average rent per square foot. The table here is arranged in order by the average rent per square foot, starting with the highest at the top and the lowest at the bottom. Holmeswood, I know this may be slightly small for many to see, but the current Holmeswood rents are in blue, and our proposed pro forma rents are in orange. So you can see, even if we are at pro forma, we're still not the highest. Okay. And here is just a graphical representation of the previous table. So the one on the left is arranged by per square foot. And on the table on the right is arranged by the average asking rent across the properties. So again, Holmeswood current is in blue. Holmeswood pro forma is in orange. And you'll see on the right-hand chart that even our pro forma rents just land us right in the middle of the group. We're not even the highest, even at a 25% increase. So again, just to show that we are in a very strong market, like Shafayette said, and that we have a lot of potential. All right, and looking over the comparables in a different manner, we are sorting them out by floor plan. So the table you see on the left, and again, apologize, it's small, but basically, as you understand, Holmeswood current rates are towards the bottom and our pro forma average rents are towards the middle. And with the top right-hand chart, that is the smaller 1-bedroom floor plan. where we land, and the bottom chart is the larger 1-bedroom and how Holmeswood plays out with the comps. And lastly, we have the 2-bedroom floor plan comparison on top and a 3-bedroom comparison on the bottom. And again, in all 4 examples, even Holmeswood pro forma is not the highest as the market. So lots of potential to grow and still be competitive in the market. So with that, I will hand it off to Ivan.
Ivan, before you get started, I just wanted to highlight, re-emphasize the point that Amy was making in the earlier slides, that even after we have implemented and achieved the pro forma rent bumps, we are still several properties behind when you're looking at the top rent for that particular unit mix type. That's important, because that's why we keep saying that this is conservatively underwritten. There is significant opportunity there, and despite having implemented the plan and raised the rents, we still would have significant room to go above and beyond before we start to hit the top rents that are already being achieved in that market. Ivan, back to you.
All right, thank you, Tariq, and thank you, Amy, for that discussion there on the rent comps. And what I'm going to cover here next is the rehab budgets, which ties into how we're going to be able to realize our rent comps. As also Corey is explaining, a lot of our room for growth is operationally driven, but then also physically driven. So with that, this rehab budget here, what you'll see is we have allocated roughly $1.5 million to upgrade the property overall. But before I get into the details there, one thing I want to point out with this asset is that when we walk the property during due diligence, one of the key things that appeal to us is that this asset just has very good bones. It's very sturdy, and nothing major needs to be done to it other than cosmetic upgrades, which it makes for a very easy rehab project overall. We don't have major boiler chiller systems that we need to take care of. We don't have major roof issues that we need to take care of, or parking lot repairs. So with that, on this rehab budget, again, roughly $1.5 million, about 50% of that is for exterior, another 50% of that is for interior. For the exterior components, the major thing we really want to cover here is a nice paint job. Give it a very good exterior look and feel that is upgraded and modern. And the other thing that we need to focus on is the balconies. There are some balcony issues going on, but we feel very confident we can tackle those issues there with the balconies with roughly around $200,000 to be able to do that. Everything else there on the exterior side is minor overall. Roof repairs, you can see roughly $10,000. I mean, the roof was very well done. It was replaced roughly 7 to 8 years ago. We walked the roof in its entirety, and overall was very happy with the roof. Also, the breezeways, they're not updated. We need to give them new carpet, new hardware, new paint. And the monument sign, that's another key thing we want to focus on. Again, with the rebranding plan in place, we got to give it a new monument sign. And then with the interior rehabs, allocating roughly about $7,000 per door. And I'll share a slide here in a minute on what we're going to cover there. So the key thing here is on the rehab plan is just the execution of everything when it comes to tackling our interior rehabs. The way we want to do that is allocating roughly about 10 units per month, and that's about 2.5 units per week. And if you break that down even more, it's about 2 crews. And we plan on hiring a professional third-party general contractor to manage the overall rehab project in its entirety, and to develop a very good turn plan on when it comes to upgrading the interiors. So what we will do is we'll take the rent roll. We'll look at all the various renewals coming up and those that won't renew, and we'll allocate roughly 10 units per month to be able to rehab. When we plan on kicking that off, well, as soon as we close, which is around the end of February, we'll immediately go into the interior rehabs. But for the exterior work, we have to wait for it to get a little bit warmer up in Kansas City before we start the paint and balcony repairs. Okay, on this slide, just want to show you what the units look like as they are right now. This is a very classic look that we would call it, and majority of the units look like this. So what we want to come back, if you look at the pictures in the bottom there on the bottom left, we want to come back with two-tone paint, give it new fixtures on a ceiling fan, update the flooring to LVT flooring. Moving over to the right, give it new cabinet fronts, new cabinet hardware, respray the countertops, or give it updated countertops, as well as new flooring in the kitchen and new stainless steel appliances. In doing so, we can easily command $150 premium on the rents, as Tariq and Amy went into. We feel very comfortable with this because during our due diligence and during our feasibility study, we walked all of the comps in the surrounding area and saw what the comps were doing with their interior improvements and exterior improvements. And we have developed our business plan based upon what is going on around the surrounding areas. So with that, I'd like to hand it over to Tariq.
Thanks, Ivan. I am going to quickly go over some of the key assumptions that we have in the underwriting. So looking at the rent growth assumptions towards the top, starting with 5% in year 2, 4% year 3, then 3, 2, and 2 in the later years of the whole period. That cumulative rent growth is more than 30% below what CoStar is projecting that rent growth to be during that same time period. So we are taking quite a conservative approach there. The other thing to point out on this slide is the economic vacancy, where we are starting out quite high in the first year. The stabilized economic vacancy in this market is very good. Physical occupancy is in the mid to high 90s. So economic vacancy is about 6 to 7% in this market, but we are working with an assumption of 8% stabilized in the later years. But in the first couple of years, in the first year, we have an economic vacancy of 31%, bringing it down to 22% in year 2, and then 14% in year 3. That 30+% economic vacancy in year 1 gives us a strong cushion for us to be able to implement and execute the plan that Ivan just went over, with a large number of units, with about 10 units that we are planning to rehab on a monthly basis once we have the asset under our management. The other key point on this slide is the reversion cap rate. Well, the acquisition cap for this asset, with looking at the trailing 3 income, is 4.7%. So we are giving a lot of cushion of more than 20 basis points a year for an exit cap of 6% after the 5-year hold. So there's a lot of cushion in that. And finally, the last thing that I wanted to point out, it has been brought up previously, the other income enhancement opportunity. The income, since it has been in-house managed by a California owner, there are a lot of opportunities to enhance that other income line, and that is something that we are intending to do. And although it seems like a significant increase, that again is conservative compared to what the property management company expects to be able to achieve at this property. So looking at how the returns are impacted with the movement of the reversion or the exit cap rate. So we are working under a 6% exit cap. If that was to continue to go even higher than that, and was at 6.5 when we sold the asset, we would still be looking at a 70+% total return for the 5-year hold. On the flip side of that, if the cap rates continue to stay low and even if we give ourselves room for a 10 basis point expansion, which still is very conservative. When you talk to the brokers in the market, other owners in the market, they expect the cap rates to stay low or go even lower than where they are. So even if we assume a 10 basis points cap rate expansion per year, we would be looking at a 5.25% exit cap, in which scenario we are looking at 150+% total return for the same 5-year hold. So the returns overall will get impacted by what the exit cap is, but with the assumption that we are going in with of a 6% exit cap, I think we start out with a very conservative assumption and hopefully should be able to beat that by a margin. Going over the financing, the debt summary for this asset, we are looking at a bridge loan of about $12 million. The typical bridge loan with a 3-year initial term and 2 1-year extensions after that with set criteria. It is going to be floating rate loan, but we will have a rate cap that we are going to purchase as we get close to the closing date. There is a 13-month lockout, but other than that, there is not a prepayment penalty that is in place. And bulk of the rehab is going to be financed by the lender, but we are still raising about $300,000 that are going to be part of the unfinanced rehab bucket. Going quickly over the closing costs breakdown here. Some of the larger items, there is, of course, a fee to the lender, and since it is the bridge loan, the lender has a fee and the loan broker has a fee. So that is there, that we are going to be purchasing an interest rate cap. That is there. There's an acquisition fee. Other than that, we have the typical insurance, taxes, legal, title, all of those costs in there. We are looking at about a $635,000 in total closing costs. With that, I'm going to pass it on to Ivan to go into the details of property management.
All right, thank you, Tariq. Yeah, with the property management company, the company we chose to work with is called Orion Property Group, which is led by Michael Napovanis. Michael and his company is a very, very strong company. We feel very, very comfortable working with Michael. Before we decided to work with him, we did a very extensive background check. We interviewed other sponsors, other property owners who have used and are using Orion Property Group, and he had nothing but great things and good things to say about his company. What do we like about his company is that he's local to the KC market, although he manages properties all over the Midwest, Southwest, Southeast. He's local to the KC market, which is very, very key because he's plugged into the market. He has direct access to all of the third-party vendors that we need to manage an asset, as well as access to the right manning pool to find the right managers and maintenance personnel that we need to manage these assets. In the local market, he manages roughly 5,000 units, and even within the submarket of Holmeswood, he has a couple assets, not only just 2 miles away. So they're very, very knowledgeable of this market and have a lot of experience executing and overseeing properties in this submarket. Another thing we like is just a very good corporate structure. They have director of operations, VP of operations, regional managers, and all down the line. And also they have a smaller footprint of properties that they manage under each regional manager, which is very, very key as well. After been doing this for a while, it's very important that you have a small footprint, and also more important that you find the right managers to manage these assets, in which I've already explained that they're able to do so with success. Also, when it comes to the construction side of things, we will be working in tandem with Orion and Michael and his team and all of his third-party vendors to execute the construction plan. With my background being the primary asset manager, I've overseen millions of dollars of rehab construction projects. And I've covered, been able to manage all types of rehab projects, from the roofs, parking lots, exterior paint, interior paint, complete office redos, you name it. I've been able to do it all now in my experience as an asset manager. So I feel very comfortable with being able to execute this project with ease, working in tandem with Orion Property Group. Okay, as a summary here, again, this is the multifamily investment opportunity summary slide for Holmeswood Apartments, 166 units. Key thing is 101%, projected 101% total return after 5 years, with a very strong cash flow, roughly around 9% annualized cash flow, giving us about a 16.44% IRR. So it has a very good cash flow component and a very good total return component as well. So how do we sign up? All right.
Ivan, before you get into that, I realized there were a couple of slides that were skipped as I was going through my portion of the presentation, which I think are pretty important. I'm just going to scroll back to those and cover that before you go into that subscription process, Ivan. So I'm just going to see if I can go back a couple of slides. So I'm trying to go to the fee disclosure slide. Yep. Ivan, are you able to pull that one up?
This one, it is up.
The fee disclosure?
Correct, it is up.
Okay. Interesting, I'm seeing a different one on my screen, but just wanted to, and if that changes on your end, Ivan, maybe you can go back to that if a different one comes on screen in a second here, but just wanted to go over that there is a 2% asset management fee. There is 3.5% property management fee. We have 1% acquisition fee, a refinancing fee of 1%, a GC fee of 5% of the total CapEx spend related to the capital improvements. And then there is the 80-20 split. The key thing to note is that at a capital event, all the proceeds, whether it is the refinancing of the property or a sale of the property, all the proceeds are going to go towards returning the investors' contributed capital or equity first before any money goes to the investors, goes to the sponsors for their 20% take. So just wanted to make sure we cover that. There are no fees for any supplemental loans or disposition on the back end. The other slide that I think was skipped was the organizational chart. Is that the one that you see on screen now?
Yes.
Okay. So just the typical structure that we have in the acquisitions that we have done previously, there'll be the borrower entity. The lender is requiring us to have a Delaware LLC first. Then there is the borrower LLC, Holmeswood Apartments LLC. That is where the investors are going to own the 80% of that. 20% is going to be owned by the sponsors or GPs. And then we have the management entity off to the right side. So just wanted to make sure we cover those, as I realized that those were skipped in my section. Ivan, back to you, and maybe you can go back to the slide that you were on.
All right, no problem. So as I was saying and wrapping up here, how do we sign up for this amazing investment opportunity? Well, we're using Cash Flow Portal. And the way you access Cash Flow Portal is with that URL you see there on the screen, which, by the way, we will be emailing out these slides so you can have this information at your use at a later time. Or if you want to write this down, you can see the URL there, smarturl.anthemcp.com/invest now. So when you go to that website, you'll see an Invest Now button on the right-hand side. You'll click on that button. And if you don't have a profile yet in Cashflow Portal, you would sign up and create your own profile. And then you'll be inside the portal itself, and you'll see Holmeswood investment opportunity there. And then go through the investment sign-up process, clicking through each field and each section along the way. As you're subscribing, you want to make sure you know how you want to subscribe, either individually or joint tenancy or through your LLC or an IRA. And also note there, if you're subscribing with the joint tenancy there, when the first investor is signing, you won't see the signature fields of the second investor after completing the signature. After completing, though, the signature of the first investor, that's when the second investor will automatically get an email to go ahead and finish signing up with the joint tenancy. So then you select investment amount and finally sign the investor documents. Once you sign those investor documents, I'll get a notification to review the documents. If they all check out good, then I will sign them myself. And then after I sign them, you are now approved. And then I will send you the wire instructions. You'll see an email notification come from Cashflow Portal to log back in and to get the wire instructions there. Now, when it comes to sending a wire, we're very, very sensitive to make sure we do a good wire instruction verification. In doing so, we would like to have a direct phone call with the person who is subscribing, in which will verify the bank name, the bank routing number, as well as the account number and the investment amount, as well as who is sending the wire, individual or LLC, etc. We'll receive the wire. As soon as we receive the wire, we'll immediately notify you that the wires has been received and make record of that for you. Also want to point out that the positions for an investment are reserved for the highest capital investment and those who subscribe first, and also finally those who actually send their funds first. So basically first come, first serve. Also within the portal, you'll see various sets of documents there. If you want to review them before signing them, you'll see an investment cover letter, private placement memorandum, the company agreements, the LLC agreements, the questionnaire, subscription agreement, and then the entire business plan. This webinar slide deck is a condensed version of the entire business plan, in which provide a lot more information for you to go back and review as you need. Some more details here on the subscription process. We do encourage you to watch this webinar and to get familiar with this investment opportunity. Also, you have to be an accredited investor, and you need to make sure you're able to validate your accreditation status, in which the investor questionnaire in the documents takes you through that process and how to do that. However, we are also working with a third-party company in which we will cover the expense. VerifyInvestor.com is a third-party company that we'll be working with. Any expense with that, we'll make sure to cover for you to be able to verify your accreditation status with this third-party company. And then, again, just want to make sure you know how you want to subscribe and take in title. And we'll go through the entire subscription process to the end, and where we receive the wire and give you notification. Okay, with the projected timeline, we're towards the end now on the right-hand side. Today is the 11th. 7 p.m. is when we started the webinar. So we're wrapping up with that. And now for the next 30 days, the subscription period is open. But do want to encourage you to not wait. Do not want you to miss out on your opportunity to invest in Holmeswood investment opportunity. And keep in mind, again, first come, first serve. But a projected closing, target closing is the 28th of February. All right, with that, I'd like to open up for questions.
All right. On the questions, one of the first ones that came in is for something that we actually should have covered, is how much is the sponsorship team putting in themselves? So in this case, as we said earlier, we are looking at 4.3 million equity raise. And we typically, as a sponsorship team, put in 8 to 10% of that equity amount. And in this case, they're going to be doing the same, putting in at least $400,000 from the sponsorship team into this acquisition. Another question, Ivan, that maybe you can address, since it relates to asset management with so many different people as part of the sponsorship team. Who is actually going to be the lead on that, and who is the boots on the ground? Can you take those two?
Yeah, great question. Absolutely. Well, from an asset management standpoint, I am taking the lead on that. However, I'm working in tandem with Shafayette and Tazrina, which you previously heard that they are local to the Kansas City market and live relatively close to this asset. But also, we'll be working in tandem with Corey and Amy. And they have already established a very good working relationship with Orion Property Group. So they are going to be the eyes and hands and feet that will be walking the property, touching the property, and making sure that we're able to execute a business plan. But I am not too far away as well. And typically what I like to do in the beginning stages of any asset is to make sure I frequent the property on an ongoing basis. And so for me, at least 1 to 2 times per month for the first 6 months or so. And then once the property is established, then I still make frequent visits to make sure I have a good sense of feel what's going on with the asset as we take it through the business plan.
Thanks, Ivan. Question about the timing of the distributions and the frequency of the distributions. So we typically do quarterly distributions, but the first distribution, we typically wait for 6 months until after the acquisition is closed before we will do the first distributions. Now, there have been instances where we have done it in a shorter time frame, but the typical expectation there should be that the first distribution would be after 6 full months of hold, and then from that point on, a quarterly distribution after that. We do send out monthly investor reports to each of our investors, and that goes into the details of the performance of the property, the implementation of the business plan, the capex that is being spent, and any other significant developments at the asset. And so that'll be going out monthly, but the distributions will be on a quarterly timeline. Ivan, maybe you can tackle this next one. When can the investors start, and then when can they start the investment process, the subscription process, and then also the accreditation, the verification of the accreditation process, if you can cover that again.
Right. So with the accreditation verification process, first thing is to make sure you read through the entire investor questionnaire as part of your subscription documents. That questionnaire will take you through a series of questions that you will answer yourself for you to be able to identify whether or not you meet the criteria as an accredited investor. And then if you do answer those questions and turns out you're an accredited investor, you still need to verify your accreditation status. A few ways to do that. One, as I already mentioned, you can use verifyinvestor.com. Also, you can have your CPA write you a letter saying that he or she has validated your accreditation status. Or if you work with a broker, like for example, a stockbroker that manages your assets for you, a licensed broker can also write you a letter to verify your accreditation status. So that is how we can verify accreditation status. And Tariq, what was the other question?
The timing of when can the investors start?
Yeah, this evening, right after the conclusion of this webinar. Like I said, you can log into that URL, which was on the previous slide, which I'll go back there now. This URL right there is when you can start subscribing this evening. Or if you would like, you can send me an email and I can email you that URL. You can go right in there and start subscribing this evening.
Thanks for that, Ivan. question about, again, going over at a high level, the fees that are built into the closing costs for this or any subsequent fees during the whole period. So that was one of the slides that was accidentally skipped, and I went back and covered it a short while ago. So we are looking at a 2% asset management fee. There's, of course, a 3.5% property management fee. We have a 1% acquisition fee, a refinancing fee of 1% as well. There is no disposition fee. There is no fee for supplemental loans. And then there's a 5% GC oversight fee for that is specific to the capex spend, the rehab spend on the property. I see another question about the loan itself and whether we plan to stay with the bridge loan and take the extensions. Very good question. So we have experience with the bridge loans, and as we get to the initial term is 3 years, and there are 2 1-year extensions built into it. There is specific debt service coverage ratio and debt shield ratio hurdles that are built in, which for the first extension, which is 3 years out, we expect to be able to achieve those hurdles within the first 18 months of ownership or so. But as we get into the close to the completing the 2nd year of ownership, we will assess the situation, the financials at that point, and see how the property is performing, how the net operating income is, and we will get BOVs, valuations assessments from brokers for the asset at that time, and see if it makes sense to whether to continue to with the same lender and to extend, or whether we want to refinance, we want to hold the asset for a little bit longer term and explore refinancing options to agency financing, whether it is Fannie or Freddie, or we would look at the possibility of where the valuations stand and what the returns might be, how the cash flow is, what the outlook is, and then see if there's an opportunity to exit and sell the property at that time. So those are all options that we are going to be assessing as we get into the 3rd year, complete the 2nd year, and get into the 3rd year of ownership. Excellent question there. Another question specific to the fact that we are new to the Kansas City market in specific to multifamily and have no prior experience there. Well, I just want to point out that, as I said earlier in the beginning of this presentation, that Ivan and I are both local to Oklahoma. We started out there, but expanded and now have assets in a half a dozen different states. In most of those, we have someone that is local, boots on the ground, with easy access, quick access to the property. And in this case, we have Shafiat and Tazrina, as well as Amy and Corey Whitaker that live, especially Shafiat Tazrina, that live within minutes from this asset and can be there as frequently as need be. And then Ivan and myself are not that far away either. We have taken day trips out to Kansas City as we have gone through the diligence, the initial pre-offer visits and diligence process, and it will be very easy for us to make a trip there as well. So yes, it is a new market for us from an entry standpoint, but a market that we have closely watched for a couple of years and have pursued several opportunities, have visited the market and the submarkets multiple times, and just have not been able to bring one in until we finally got this one. And as has been pointed out earlier, this one is at about $85,000 a unit price point, which is very attractive. There already are transactions for this class of asset in the 6-figure, well above 100,000 per unit price point. So we feel very strongly about it and don't see any concern with the fact that it is a new market, but we have experience in doing that in multiple markets successfully already. I don't think there is, and if I might have missed any questions in the chat, is there anything else, guys, that you might have seen that I may not have brought up? I guess not. Well, in that case, we just wanted to thank you again for taking the time to be with us and attend this presentation this evening. As Evan said earlier, the process is, the subscription process is up and running live, so you can get started on it. Feel free as you go through that process, or as you are reviewing the documents or the business plan, and you have any questions, feel free to reach out to any of us via email or phone, and we will try to be very responsive and answer any questions that you might have. With that, we will wrap it up for this evening. Thank you very much.